long time, and this is what is needed to stop. And we have to actually, now what we have to do is, and we've started doing it at Nike Wealth, that we started slowly trying to destroy the old practices, the way we used to do business. Because if you read a book called Marshall Goldsmith ka ek book hai, it says, I mean, the title is very beautiful. He says, what got you here will not take you there. So आज तक आप जो आपको success मिली है, it will not take you to the next level. Those same ideas, same things will not take you to the next level. And I completely agree with Ashish that, you know, we will have to change the way we've been doing our business. Coming to technology, and I said this in one of the forums last time, that our industry has had a peculiar problem. You know, our difference between our industry and credit cards have always been very successful. You know why? Because buying credit card is very easy. बंद करना बहुत मुश्किल है. Our industry, buying mutual fund is very difficult. KYC कीजिए, बाकी सब कीजिए, उसके बाद you have to fill up a form, लंबा form, उसके बाद disclaimer भी होता है, वो कर दीजिए. Selling mutual fund very easy. Printed form, और कोई MCs तो, you know, we've got all units के लिए भी tick box है. So we don't have to write all units also redemption के लिए. So we made selling so easy, but buying so difficult. So I think with technologies, there are fundamentally 2-3 things that we can do, and which we did at Next Advisors. The first thing that we looked at was buying mutual fund was very difficult. So we tried working on how can we make mutual fund buying easy for the investor. How can we actually get the client on the board, onboarding very easy. So that's one thing. Second thing, when you talked about profiling, yes, we've always had profiling as you know, age profiling हम लोग करते हैं हमेशा. We do profiling, and that used to, I come from sales, so मेरा favorite profiling used to be 1 से 5 लाख, 5 से 10 लाख, 10 लाख से 50 लाख. So you know, when I used to see a client, ये कितना डालने वाला है, that was the profiling that used to run in the mind. But gone are the days that you cannot profile a client like that. So what we do at our end is, first, we've actually, you know, this is just the secret that I'm sharing. One thing that we've started doing at our end is, we call them past-based clients, future-based clients. So there are past-based clients. Past-based clients talk about preserving the money because their psyche is completely different. They just want to actually look at how do I preserve what I have. They are not looking at मेरे को कितना बनेगा. And the other is, and then they talk about markets कितना negative हो सकता है, क्या हो सकता है. And then there is other category which we've categorized as future-based clients. These are the guys who will actually earn lots of money, who come up with a lot of ideas to us, and they will give us more business. The other thing that we do is, professionally, how can we help clients? So we've got 2-3 advisors in my team who only talk to doctors, because you know, it's a different segment altogether. So these guys understand a lot of what do you call their problems. The biggest problem is obviously cash. The other problem is, you know, they have odd hours of working. So that is how we try to profile them. And then there is a category, there are 2-3 guys who are dedicated to only to service class people, because their timing are different, their needs are different, their aspirations are different. But when you start understanding their needs.
Do you also manage different portfolios for each of these customers?
Yeah, absolutely.
Like a similar thing?
No, certainly not. And in fact, the way we pitch to a client, the way we acquire a doctor portfolio, so we have a different talk, different pitch, different small PPT for those clients. And then when we talk about talk to a service class guy, the needs are different. So their pitch is completely different. Their financial plan that we do is completely different from what we do for doctors.
So using what you provide, can we create model portfolios for different types of customers and execute those?
Yeah, certainly. It's pretty easy to create those models, and it comes from practice. So, you know, once you start interacting with a focused group, you will actually get, you know. So, and like Mr. Sanjay Sinha said, the reinvention or destruction is in our hands, the advisor's hands, because we are the closest guy in the supply chain. We are closest to the customer.
Absolutely.
So we understand the customer better. I mean, I'm not saying me. All of us understand the customer better than anybody else in the chain.
So thank you very much, Nikhil. I'd like to invite Mr. Bhatt, Ramesh sir here. That, you know, in your mind, when you deal for so many years, you've been encouraging IFS to get into practice. You yourself been dealing with so many clients yourself. Uh, what do you think a client expects? Is there any difference? Do you perceive any difference between what a client will expect if you tell him that I'm an advisor who is going to charge you a fee, versus you tell him that I'm a distributor and I earn commission? What do you think is the investor's expectation at the end of the day?
That's a very good question. Before going to that question, let me start with the way you have started, the push and pull. That is very important now. Everybody love to hear on that too, the push and pull part. Friends, I'll tell you, pull is always dangerous.
Absolutely.
Pull is always dangerous. I have seen in even in the earlier speaker when he was talking, will people stand in queue to buy mutual fund? Yes, they did. Yes, my friends, I'll tell you, they did. They stood in my office outside, they stood in line, and they have taken the application. I'm not naming the fund house because it is still existing. It is a fund house which has come first time to India, and everybody invested in the year 1993, standing in line, taking the form and invested it.
Yeah, absolutely.
No naming. Huh? They invested, it was a pain, it is a pull. It is actually a pull. But what happened? We have not sold it. It has been sold automatically. What happened when infrastructure story started? It is a pull. Everybody has seen the infrastructure story. And what happened? What happened when gold started going up? Every client started asking you gold, gold, gold. And nobody is talking about gold now. What happened? So push is always dangerous, my dear friends. Pull is always dangerous. Push is good for us. Again, on the part of the fees. So you agree now, push and pull. Pull is always...
Sir, I have two fears. I personally, as a salesman, I think that if the client is going to ask me and if there is pull, then my talent doesn't come out. I have nothing to do. I'm not sitting here to pass the form. That is one. And second, I completely agree that when does something become very popular? It becomes popular after everybody has made money. So obviously, and today what is the most unpopular thing to do? Today the most unpopular thing, like for example, I don't know about Hyderabad, but in Bombay there are certain places, in Parel you might be knowing, there is a row of shops. That entire row of shops sells discounted mal. Export reject, it's called a second sale. And then when you go there, somebody will sell you a shirt with one big collar, one small collar, or a shirt with a slightly wrong cutting, or shoes with some defects. And knowing fully well, people buy defect kamal because it is 30% discount. Now what is happening? Everybody is complaining about our economy. ये भी खराब है, वो भी खराब है, ये भी बंद है, वो भी बंद है, सब कुछ बंद है. इसलिए तो बाजार 6 साल से 20,000 पे है ना. You're getting a discount because everything is bad. If everything was not bad, who would anyway give you discount? So I think pull is definitely not the place to go. But yeah, I mean, in your experience, we may brand ourselves various things, but what does the customer actually expect?
See, the customer actually is a simple thing. What the customer expects is 1% or 2% more than the bank deposit. And he wants his money to be always safe. And most example, I'm talking about my own clients, what they see is, when I have given to Ramesh, it is safer. So that gives more pressure to me, in fact. It gives more pressure to me. They say, Ramesh, you will take care, I know. Where to sign? Let me know. See, my money is safe. That way, so as an investor, as an advisor, my part is still becomes more pressure, and I see that my client invests in a best fund and he gets the best return. He wants only that. He is not bothered about when you go and talk to your financial planning, you go and this way, that way. He wants only 2% extra income. Then the bank deposit. He doesn't want to take any risk. If you make any loss to him, that will be the first thing. You might have made 100 crores profit to him, but if you make 1 crore loss to him, he will tell only that, not the 100 crore profit. He will see about only what he needs is only 2% extra CAGR. My friends, we should work for that 2% additional CAGR in the safe and best way, and always pull more clients towards us.
Absolutely.
That's what the client expects.
You have something to add, Sanjay?
I think, Maybe the pull for a product is bad, but the pull for an advisor is good.
Excellent. Absolutely. Thank you very much. So I'd like to now rope in Shefali here. So Shefali, you have a lot of experience of working with clients in Agra, right? And there is this entire new animal which has been now created, which is T15 and B15. And when I came here, I learned it's actually called A15. It's not called T15. I don't know who invented that, right? So what is your experience? What do you think? Do you think that, okay. So in your experience, how do you think client expectations differ when it comes to a B15, so-called B15 place? That is one. And the second point is, one is of course how clients' expectations are. How do you tackle them? And the second point is, do you find, like you travel to all these locations, you've been in every conference, do you find the level of interaction or the quality of inputs from AMCs as good, or do you find differences in a T15 versus B15 setup also?
Ashish, I think I will specifically talk about Agra and the adjoining areas because
Sure.
I have no clue about what's happening in the rest of B15.
Sure.
So as far as expectations from products are concerned, I think as Mr. Bhatt had said, that the benchmark is the bank FD. So anything over and above the bank FD, which is say 50 to 100 bits extra than that, the investor is quite happy with that. So I think, however, they need some level of certainty and straight line kind of returns. Now, what I've seen is, I think simple products like MIPs and SIPs into plain vanilla equity funds, they are more far-reaching. And structured products like, structured products are really complicated and very tough to understand, difficult to comprehend. So, for instance, I'll just quote an example of Firozabad, Oraiya, and Jhansi. I don't know if you've heard of those places. The main product lines there are SIPs into plain vanilla funds.
Sure.
So this is what it is.
And what do you see about the level of or the kind of inputs that you get from asset management companies? I mean, do you find any difference when you go to a Delhi or a Hyderabad versus what you see in Agra or Firozabad?
See, Ashish, practically speaking, our bandwidth of communication is basically limited.
Okay.
Right? It starts from the relationship manager and ends with the zonal or the regional head.
Sure.
So ideally, information that percolates from the fund managers and from the CEOs to us through these channels, basically, irrespective of whether it's from B15 or T15, it is one and the same, basically. So, but at the end of the day, a lot depends on how much your relationship manager knows and how much he's actually able to translate and communicate to you. So you may be having a relationship manager who's, able to understand the inputs very well and then communicate it to you in a proper fashion. And on the other end, you may be having someone who actually doesn't know what his product is about or what the markets are about. So I would also like to add that, a lot depends on us as well. Because if you keep bombarding them with questions,
Sure.
you'll be able to actually, you'll be able to convince yourself about the product, and then you'll, in line with
Sure.
it'll be in sync with the customer requirements.
Thanks, Shefali. So I would like to pull in Shabir sir out here. You have obviously, so you obviously, have vast experience in India as well as abroad of interacting with a lot of clients and investors. And we did mention about profiling customers, interacting with different types of customers, giving them the entire variety of what is applicable or what they would prefer to deal with. So what is your own experience of what do clients expect and what all we can offer to them?
Yeah. Let me start with the topic of today's discussion, reinventing. I would like to, the word reinvent comes when something is already invented. So I would like to get into something different and try and bring it to the forum is, I would like to invent something here in the mutual fund industry. The area that I'm talking about is something which probably most of you must have heard of it or read of it, but never thought about it. And that is Islamic banking or alternative investment opportunities which are there. I'll first give you a brief for removing the mental blocks of what the topic is, Then I will talk about what the investor expects and what the market is, what the advisor can do as on today. Then I will talk about what AMC can do. These are the three areas that I would like to touch.
Sure.
First, to just give you an idea of what is Islamic banking or Islamic investment, Islamic finance, let me give you some figures. The total industry is about $2 trillion. $2 trillion. It is already there, existing, practicing in 75 countries. It is not in India. That is one. Two is that in India, the population of the community is about 120 to 150 million. There are different figures depending on the statistic when they have taken. 150 million people are there who are looking for investment solutions. Are we addressing them? Now, what are the opportunities in India for this kind of investment? What can we offer them? What are the expectations? If you look into it, one is a banking, where the financial inclusion, they are not there, because I'll give you an example. There are about 42,000 crores of interest money lying in Kerala, which is interest money unclaimed. 42,000 crores of money lying in Kerala, which is interest money unclaimed. This is the amount of potential it is there. The population I have given to you. Now, if you look into what are the opportunities for them, banking, it is not there, because Banking Regulation Act needs to be changed, because banking says that you cannot claim the interest. Two, if you come into the capital market, there are a lot of opportunities there where you do not require any regulatory changes. In India, there are the 6,000 companies. Out of the 6,000 companies, 4,200 companies are Sharia compliant. It has got the largest number of Sharia compliant companies throughout the world. Larger than including putting all Gulf Sharia compliant companies and Bahrain, India has got the largest Sharia compliant companies. 60% of them are, into the, what do you call that? One is the accessories, drugs and pharmaceuticals is one, software, etc. Third is the auto and auto ancillary. These are the kind of figures. So about 321 companies out of the BSE 500 are Sharia compliant. So that's the market that we have. Now, coming to what are the products that are available, what does the client expect from us, the investor expects from us, that it should be something which is, in compliance with the faith and which is there as a normal. If you can give an alternative, that's fine. Now, before that, let me also get into explain to you what is Sharia compliance, what is Islamic investment. There are 4 parameters which are there. It is nothing else than anything else. It is only a faith-based one. One is interest is not permitted, because what we believe is that rupee or the money is a means of exchange and is not a commodity, so it cannot be traded. Number 2 is the parameter that we have is that the market capitalization of a company should not be more than 33%. Receivables should not be more than 49%. Interest, which comes as an incidental income, does not exceed 5 to 10%, and which has to be given as charity. Now, if you filter these kind of activities, one is another filter of the activity. Activity-wise, if you filter it, interest is not allowed, alcohol or pornography is not allowed, media which is vulgar is not allowed, and chemicals are not allowed. So if you filter the activity-wise and then the financial parameters, that is what is financial investment of Islamic investment. So it is nothing which is great. It is there in the company. Everybody, you and I, are using it. Everybody and you and I are doing it. Now, again, to give you another statistics, 40% of the investment in such kind of investments are from the non-community people. To just give you one example, I can tell you, in US, there is one fund which is $1.5 billion, and 75% of them are from the non-community people. So I hope I have removed the blank. Now, what do the investors expect from us? The investor, what he expects from us is, if I'm getting this kind of a return from a bank or from an investment, can I make it Sharia compliant and get the same kind of a return? Are we doing that? Coming to what we can do here, what are the products available for an advisor? Are you aware of it? No. Most of us do not know what are the opportunities which are Sharia compliant. Today, there are 2 Sharia compliant mutual funds. One is a Tata Ethical Fund, the other is a Taurus Ethical Fund. Now, both these funds do not make investment into those kind of companies which are non-compliant, number one. And they follow the parameters. They do a concurrent audit. There's a Sharia board, that means who do the concurrent audit and say that, and certified to say that these are the Sharia compliant ones. Third alternative which is there is the Goldman Sachs ETF. Now, ETF is a very, I should say, low risk kind of a product which is available. Fourth is that all gold investments, gold ETFs are all Sharia compliant. If you are looking into the commodity, you can look into e-silver, e-gold, and e-copper. these are the various kinds of products which are available to us. If we offer these products to our investors, then they would be happy with it because most of us are not available, are not aware of it.
This is something which is, I mean, in terms of, like we were talking about very basics of client segmentation or understanding the client profiling, and this I think is completely missed out. So thank you very much, Sabir sir, for educating us on a particular
I have just one last kind of thing for the AMCs. AMCs, we have seen that we have got a lot of NFOs which have come, and the NFO fever is gone. But if you want to create a product like that, the suggestion to the AMCs I have always been giving is that some of these schemes which are there, which are not working well or which are not performing, if you can club the schemes or convert the schemes into Sharia compliant one and also get into the tax savings kind of a thing, that would be very helpful and it would be a new product.
Sure. So I should thank you very much for highlighting something which is a pretty big category. And I think in terms of client profiling, that is something which we genuinely need to understand. So I'm given to understand we are obviously running slightly late on time. I'll just use this opportunity to sum up, 3 or 4 things which I could draw from the words from each of the members of the panel. I think one very important thing which one needs to keep in mind is that by talking of reinventing, by discussing it endlessly, I don't think that reinvention is going to happen. It's very important to keep in mind that who is going to reinvent is something which we need to think about. And it's also very important that what we keep speaking, what we keep discussing, what we keep worrying about, we need to do something about it. And the only people who can do something about it are the people in this room. So there are asset managers here and there are advisors. And we try to bring out variety of points that instead of talking about regulation, instead of talking about capital markets, instead of talking about things which are absolutely out of our control, it's better that we focus on what is in our control. So I hope that some of these discussions have been useful. And more than that, I hope that we'll do something about it and keep in mind that it's for us to do and not for us to wait for others to do something. I'd like to thank everybody. Thank you very much. Thank you.